Hello and welcome to this very special show. This year marks 20 years since Mukesh Ambani took over the reins at Reliance Industries and the transformation of the oil to telecom giant under his leadership. We're going to discuss various aspects of this over the next 30 minutes or so. I'm Prashant. With me, my colleagues Reema, Lata and Sonia are standing by on the big wall as well. I have to, before we kick it off, wish Lata a very happy birthday as well, Lata. Happy birthday.
And she shares her birthday with a lot of other big names.
Oh yes, Dhirubhai Ambani himself.
And Ratan Tata?
Ratan Tata, Arun Jaitley and the Indian National Congress. Their first meeting was on 20th.
And they must also be saying that we're in good company. So happy birthday, Lata.
Thank you. Thank you. It makes you feel how small you are. Others have achieved so much. Anyway, go ahead, Prashant.
Well, so let's set this up, right? Sonia is standing by on the big wall to walk us through Reliance's landmark journey under the leadership of Mr. Ambani over the past 2 decades. Sonia, over to you.
Well, the year 2022 marks 2 decades of Mukesh Ambani's leadership at Reliance Industries. So we take you through his journey and the exponential growth the group has seen over the last 2 decades. Let's throw it way back to July 2002 when 45-year-old Mukesh Ambani took over Reliance Industries after the demise of his father, late Shri Dhirubhai Ambani. Since then, Reliance has achieved consistent and strong double-digit growth. The market capitalization of Reliance rose at an annualized rate of 20.6% in the last 20 years, rising from 41,989 crores in March of 2002 and now standing at a whopping 17.82 lakh crores in March of 2022. In fact, we've put together a table of the key financial parameters and how most financial metrics have seen high teens growth in the last 2 decades. If you look at the table here, the revenues and net profits have risen 15 to 16% on an annualized basis over the last 20 years. And if you go through the rest of the table as well, exports, assets, net worth, all cumulatively rising anywhere between 16 to about 19 odd percent. That's the kind of growth that we've seen under the leadership of Mukesh Ambani. But the gains are not for the group to enjoy alone. Reliance has successfully and consistently generated wealth for its investors. It added 17.4 lakh crores to investor wealth in the last 2 decades alone. That would be an addition of 87,000 crores to investor wealth every year. Also, Reliance has displayed agility and relevance by investing in new and upcoming businesses. Reliance's E&P business made its first hydrocarbon discovery in late 2002 and production started in 2009. Reliance Retail started operations in 2006 and the breakthrough came in 2016 when Reliance entered the highly competitive telecom industry. Reliance Jio started operations in 2016 and this led to the cost of data per GB falling from 500 rupees in India to 12 rupees post the launch of Reliance Jio. Not just that, India's ranking in broadband data consumption moved from 150 in 2016 to number 1 in 2018. This at a time when traditional refining and the petchem business continued with its expansion. From a single refinery in 2002, Jamnagar is now the world's largest single location refining complex. Reliance has added some of the world's largest downstream units to its book as well, setting up the world's largest refinery off-gas cracker, Jamnagar, and added the world's largest petcoke gasification unit.
Well, Sonia, thank you very much. That's a very comprehensive look at the journey of Reliance Industries and what a journey it has been. You know, I must say that I visited the Jamnagar refinery sometime, I think it was in 2005 or 2006, and it's a sight to behold. I mean, it's just a dazzling, spectacular city. I mean, actually, it is a city. You know, you realize the scale of these things. I mean, we talk about refineries and, you know, petrochemical units, etc., but it's just something to see, to believe in. And of course, as Sonia pointed out, the next one came up later, was commissioned, I think, in 2008, 2009 as well. So, you know, but I've only looked at Reliance for the last, 17, 18 years. But let's get someone who's looked at Reliance for much longer than that, a veteran really. Manish Chokani of Enam Holdings is with us. Manish, great to have you with us here. Thank you very much. You know, it's a spectacular journey, as Sonia pointed out, and so many industries now, right? And newer getting added pretty much every couple of years. The latest push, of course, is in Reliance Retail in a very large way. Your first thoughts?
Well, Prashant, first of all, thanks for having me. It was probably more appropriate to have Vallabhbhai here, who's on a flight. So he spent a lot more time with them. I was, of course, fortunate. I started, I don't know if many people will know, I was the first analyst covering Reliance way back in 1991. when they were just going to launch their GDR issue. And just to supplement what Sonia said, I think the profit of Reliance in that year was 150 odd crores, which is, at that exchange rate, $50 million. And from that $50 million to be at a $10 billion plus run rate of profit where they are today is just a staggering journey. It's 200 times in the span of this 30 years. And whatever one says about Mukesh Ambani will be, I think, limited, because what his achievements are and where he's led this company to, even before taking over as CEO, as you said, if you think of the refinery which was put up and all the petrochemical units which also came up and transformed Reliance from what was essentially a polyester and a PTA producer to petchem, and then to refining, and then onwards to E&P. And now eventually they will get into green hydrogen and so on, and transform the energy landscape of the country. It's just a staggering journey. And how the late Dhirubhai would say, we have to change orbits each time and not be satisfied in the orbit one has reached. So I'm just in awe and complete admiration for both the company and the person who has led it over the last, more than 2 decades now.
Manish, actually, I wanted to start off at that point. Do you know of any other company that would be actually captive to commodity cycles if it was only petrochemicals, and then so neatly moved into cutting-edge mobility, communications, and then it could have been, there are many telecom companies which would have been just a utility, and then you so smartly convert that into using that utility for FMCG, retail, etc., cutting-edge use of the internet. Are there any other instances? I mean, it's a dramatic transformation.
Well, Lata, I've said this before in one of your interviews. I think it may have been even 20 years ago, if I'm not mistaken, that in a nation's history, sometimes you get a Rockefeller, sometimes you get a Carnegie, sometimes you get, a JP Morgan. And we've been fortunate in a sense to get all this combined in one entity called Reliance in India, where they've constantly, changed, as I said, the orbits and gone to newer and newer things. With, at the heart of it, what my learning is, they've always operated on first principles, and they will drill down to actually the lowest atom of or unit of production, if I may call it that. And while, of course, Geo launch is shown on your chart as 2016, I remember working with them on what was the earlier avatar of Geo, which was Reliance Infocom, which is the 2001-2002 vintage, when again the vision of the company and the person was really to transform the way telecom was conducted. And they were clear even then that voice is history and it will be data, as far back as 2001. And Dhirubhai had actually said we must get this down to the cost of a postcard. And that was really the mission with which this was approached. So again, while you're thinking of it as moving from commodities to new age businesses, I don't think if one would go and examine the way the Reliance refinery was built, with the fluid catalytic cracker, with the gas cracker, and you would not have been able to produce a lot of the products which come out at the top of the refining barrel, taking the worst crudes in the world and transforming it over here, if they hadn't had that complete grip over technology. So whether it was taking PTA when DMT was the prevalent technology, which Bombay Dyeing was running in those days, whether it was going down the route of CDMA when GSM was the prevalent technology, or indeed today, when we are sitting and already using 5G much ahead of rest of the world, it's really because they've worked on first principles. And at two ends of the spectrum, if you think of it, if we did not have the Reliance refinery, and they're probably now a third of all refined capacity in India, we would not be moving the way we are currently, and especially with what's going on in the geopolitical arena and from where they're sourcing routes and creating. And at the other end, think about in COVID, we would have shut down if it wasn't for really Geo, which provided bandwidth for the whole country to operate. And looking ahead, again, we've spoken on one of your earlier shows about the 1-1-1 aim which has been put out for the green hydrogen, green energy initiative, which can again be transformational for our country by the end of this decade. So just like, as I said, complete awe and admiration for the level of thinking, the vision, the detailing, and the sheer class of execution on beyond world scale, which they managed to execute.
Jio has heralded India's digital journey, right, by providing connectivity to one and all. And that has given rise to so many unicorns, so many companies which are riding on, Jio's connectivity to everyone in India. So that has truly been a game changer. Manish, but under Mukesh Ambani, he seeded so many business, right? Jio's one, retail, now new energy. There's financial services, which is soon going to be listed as well. Which one are you most excited about, which can be transformational in the next 10 years?
Rima, the thing is with Mukesh Ambani, you be excited about Mukesh Ambani because whatever he touches is gold. And, there was a very famous AGM where the late Dhirubhai was conducting affairs. And a shareholder got up and he said, and I won't say it in Gujarati, but he basically said, if Dhirubhai will dig, you will find oil. Because he had that knack. I think Mukesh Bhai has that knack that whatever business he chooses to enter, he does it very, very thoughtfully with his team, Manoj Bhai and others, all fantastic leadership team which has been built over there. His knack for building people, building leaders in the company, empowering them, keeping the leadership team very young is just outstanding. And therefore, there's no one business because it works together as, how shall I say, a constellation of stars. That Jio is made more powerful because of its retail. Retail is made more powerful because of its broadband. The financial services will obviously be a play alongside with what has been created on the retail side and so on. So I don't think one should try to strip the elephant and see whether the trunk is better or the leg is better or the tail is better. This is an elephant which is a powerful elephant and moving really, as you said, with the agility of a tiger. So it's a very rare combination, and we are lucky in India to have witnessed the journey of this company and excitement about what lies ahead for them.
Oh, absolutely. Manish, this is Sonia here. It's not just created wealth for their own group, right, but also for shareholders. I mean, I was going through a recent study that Motilal Oswal put out for 2021, where they said that Reliance Industries has created 10 lakh crores for shareholders in the last 5 years, the largest by far that any group has created in terms of wealth for its shareholders. Do you think that it can keep this legacy intact over the next 5 to 10 years, given how dynamic the environment is?
Sonia, I'm of course a votary of the company, so you're asking someone who's a deep admirer. And like you yourself pointed out, if you compounded at 20% per annum for 20 years on larger and larger incremental capital, it just tells you of the propensity of, knowing where the puck is going to. So while we in the markets may look 2, 3, 4 years ahead, here is someone who's used to looking 10 years ahead. And I remember a meeting where he famously said that, if the profit I make is, let's say, 100 rupees in a year, I will make 400 over 4 years and I can lever it, say 0.5:1. So I need 600 rupees of projects at any given time for what we are going. And only at that pace can one keep on compounding. And if you look at them, I think even today, the projects on the anvil are, if I'm not mistaken, already about $75 billion, which are already announced and under implementation. And when they put $1 of investment in, they know how to create $2, $3, $4 of market value from that. So from a $200 billion, whatever market cap we are today, if that 75 billion gives you the next 150 or 200 billion, you can already see a doubling of the trajectory of where this company is headed. So yes, short answer to you is yes. I remain confident about what they will achieve in the coming years.
Okay, Manish, what do you think is going to be the trump card going forward? Because, look at the number of acquisitions. I just can't remember. I don't know if we'll be able to even put them all into perspective. Just Dial most recently, before that, Savin, Hamleys.
Metro is the most recent one.
Metro, the most recent one. And so many smaller companies in, AR, in cutting-edge software technologies. What do you think Reliance is going to look like? Will it be a software leader? Will it be a retail leader? Will it be a green energy, green hydrogen leader? What's your best guess?
Lata, I think the way to look at it is that Reliance has transformed into a conglomerate. So while we think of it as one company, it's more useful if you think of it as, say, the Tata Group. So it's not like in Tata when you say that, oh, they're making trucks and they're also doing software and they're also doing, consumer products in the erstwhile Tata Tea. It is something which, because the missing skill in emerging markets like ours is really management bandwidth. So while in the US you may go very deep because markets tend to be deep, here our consuming economy is still fairly narrow at the top of the pyramid. And therefore you can't really necessarily go very deep because per capita income really falls dramatically once you've crossed the first 28th percentile of Indian consumers. And therefore you can use that expertise to go across various verticals. And because they work with first principles and they're not aping what someone else has done in US or what someone else might be doing in India, that's what we call the changing of orbits and the agility with which you can conquer sector after sector. And they've also had the vision to do things which are meaningful in size, and not taking small bets and trying to extract the juice out of for example, you could have said I'll go in paper and I'll put up a cement and so on and so forth. But at the scale at which they are, the bets, if you think of it, a lot of the acquisitions you say are really string of pearls, completing the array of product offerings or consumer offerings that they have, for example, in retail or around the broadband cluster, and now with finance, which also will feed in really to your retail and consumer finance cluster. And the big bet for the company now, obviously, is transforming the old energy into the new energy, where you'll get the solar power, the hydrogen, and the battery technology coming together to hopefully transform not just for Reliance, but also India's energy landscape. So I think it's useful to think of it as really that conglomerate, going down 3 or 4 different fronts, but eventually converging around the consumer in India, who will need energy, who will need shopping, and who will need financing, with retail kind of being the front end for all of us.
Okay, just a here and the now question. I mean, since Lata brought it up about what the future could look like, do you see more monetization avenues for Reliance Industries? Of course, we've been talking a lot about how Reliance Retail is looking to list overseas. There's that full game plan, in motion now. But from a shareholder standpoint, what are the other monetization avenues according to you?
Sonia, there's just so many things. They are the people who taught us all finance. They are the people who actually created the capital market in India. So, where you get value from investors, like they showed in bringing in people from Geo, because you may have had a longer lead time in producing an IRR in the underlying business. And if you can bring in investors who pay you that top dollar and share your kind of outlook for 5, 7, 8 years, I think that would make eminent sense. They've historically only gone and raised after the execution risk, in a sense, is out, because that's when you really attract top dollar. So yes, all of these, whether it's retail, I think at some point in the future you will see, I think, someone coming in on the whole energy platform as well. But again, I'm no one, anymore working with them, so I have no deep insights into what the current thinking is. But there are so many assets sitting inside which are monetizable, and the sum of parts is surely greater than what we all are able to perceive and see today, because there is already on the side the Reliance Life Sciences and so on, so many other initiatives happening inside, which one will not even be aware of, as a public investor.
You spoke about the sum of parts being greater. Manish, one of the big differences between Reliance Industries and Adani, the two powerhouses of corporate India, is that the Adani Group has multiple listed entities, while Reliance Industries up until now has only one listed entity. I know they have plans to list some of the other businesses, but they've been slow on it. Do you see that changing in the next couple of years? And your thoughts on the fact that they've decided to keep all the businesses, diverse businesses, under one entity as of up until now?
So, see, there's no right or wrong answer. And again, a lot of what Mr. Adani has done is again incredible, and what he's created, and again their national assets, is fantastic. But to give you the analogy, there are a number of companies listed within, say, the ICICI group. And there are no companies listed in the Kotak group, and both are fantastic companies. Both are run by fantastic leaders. Both are well-creating entities, and one takes a different approach depending on one's personal style. It is obviously been a matter of great speculation in the markets that eventually each of the the next generation of Reliance may get to lead one of their businesses. They may choose to say we want to do it as a separate entity, or they may choose to run it as part of a conglomerate inside. Who's to say? But like I said, there are a number of things which are separately listable, separately valuable, and it's really a decision of, do I get a greater value by putting it outside, or does it benefit by staying inside a conglomerate structure? And it's the classic debate, right, from 1980s, which Michael Porter and Michael Jensen and all used to talk about. That is there value of staying inside because you get patient capital and more long-term kind of view on things, or do you take them outside and expose them to the vagaries of the market and try and see if you can extract top dollar from that? So time will tell. I don't think there's a right or wrong answer over here.
Oh, yeah, that's very well put. 2 points. We were just looking at data on Reliance Retail. Each of the businesses of Reliance Retail is much larger than, companies in that, like for example, in groceries, Reliance Retail is much larger than a D-Mart. In retail, in fashion and retail, it's much larger than other listed companies which just do that. So within each of these companies, each of these businesses, the size is very, very large. So absolutely a conglomerate. And the other point, Manish, which you always emphasize, and maybe not enough credit is given, is the fact that they put top capable people to run the show, right? I mean, the depth of management is there, which I think is so important for such a large group, and they've been able to create that. Thank you so much, Manish, for joining us. It's a pleasure having you with us here and sharing those insights and your sort of experience working with the group at one point, and of course, what you see has panned out. Well, we'll take a quick commercial break here. We are back. We continue this discussion with other veterans of the market. Stay with us.